like G's on drive-bys. I never took a loss. Never took a loss. Never took a loss. Never.
Okay, hold your horses. I'm back and I'm ready to feed you guys with a few good doses of trading setups. I've been quite caught up with things lately, hence my absence, but not to worry. I will be popping up like this from time to time when opportunities will arise. I have a few nice setups to share with you all, some which caught my hawk eye. So let's go. First, we're going to start with the dollar index, then head on to the metals, and we're going to finish it off with the currency pairs. All right, so let's just go to the market analysis section here. And basically, let's make a recap on the previous analysis previous video basically with the dollar index. So we basically catch up, and then we'll head on and basically get updated on the actual charts. All right, so as per let's just make a small summary here, quick one. Okay, we have primary A on top, then primary B retracement, and then we're shooting for the primary C, 1, 2, 3, flat in corrective 4, and we're shooting on the upside with 5 moves on the upside, of course, 1, 2, 3, and now we're within basically this corrective 4, which can be very similar to this double zigzag right here, or flat, the double flat, whatever. So we're basically shooting on the upside. So from the time of the posts, basically this happened, right? Gain support just like I expected here to basically go on the upside right here, and we will basically zoom in here to prepare for next week and what's going to happen with the dollar index, with the currency pairs, and with the metals, of course, because there's a good trade coming for gold and silver. Crude oil, I'm not really fond of it right now because there's a very difficult wave count happening right there. Should basically have a bearish run, but it's really, I was waiting for it for a long time, and it seems like it's not really coming. So I'm just gonna let it go for now and take a look at it later on, but I'm gonna focus on the metals for now. So gold and silver are indeed the focus. I'm gonna actually tell you why. So let's head on to the dollar index, basically just to zoom in right here. Okay, so as we can actually see, after the third wave, third impulsive wave, right, we actually have a retracement on the upside, but we also have a head and shoulders pattern right here. So we have the left shoulder, then the head right here, and then the right shoulder. Now the right shoulder, I would actually be more satisfied for it to actually happen around 61.8 and slightly above the left shoulder right here. So that will be our cue. Another thing, oh, very sorry for that. Let me just okay. Now, one thing that I could say is that this downtrend and obviously the channel breakout. What I can say is that this pretty much looks like a double zigzag or something like that. Basically, a complex formation WXY. Why I'm actually thinking that is because this cannot be counted as an impulse, because the fourth wave will actually go everywhere you look. The fourth wave will go price waves one territory, which is not satisfying for me. So many moves with free waves structure. So therefore, this pretty much looks like a W. This whole thing. So what I'm expecting is the X to happen on the upside. Obviously, I did let you know about this. Let's just go on that, and then we'll basically continue with the analysis. Okay, let's just make this larger. Okay, full screen. So basically at this time around, the analysis was actually posted on the 2nd of February. Okay, so from that point, let's just load the new bars, and boom, this is what happened, right? So we were actually prepared for this. We called it, and we basically had a good thing going on with the USD JPY trade, and many more. But anyway. let's just go back to the chart there. Okay, let's just zoom on in and let's get updated basically on this X and how to actually trade it. Okay, so from the basically from the end of the W, basically the wave X commenced, right? So wave X should be formed out of three waves on the upside, and then basically going down and thus completing obviously the head and shoulders formation. So short term wise, we're going up, medium term down, long term up. But obviously we're gonna wait for it, right? So in other words, the minute wave A basically was minuet wave A was formed out of three moves on the upside. This if this cannot be counted as a 4 because it goes inside price one's number one's territory, so therefore it's a B, right, with a swing on the upside with three moves, A, B, C, and then corrective B and then corrective C right here. Then we have a channel breakout right here. We couldn't actually see this very well because we don't have a trading setup, a sell setup, basically such as a flag or a retest of this breakout. However, price reversed here with this B, with a basically an ABC right here, thus basically giving us a bearish divergence. Now, what's actually happening, or what's expected for next week, is we actually have the following thing, right? We had the first impulsive wave for this C, then a corrective in B, right? And then we have the 3, 4, 5 for this 3, and now we're just having that correction for 4. We got an A, B, C so far. We'll see if this stops and if it goes basically down towards this 5, or obviously it should not go inside price one's territory. If this line is broken, then we're gonna look for a sell, basically for a buy setup such as a flag or something to basically continue going up, because this can obviously be treated as a running flat. All right, so this C can actually end there, so therefore we will treat this as an A, B, and then C right here, and then to basically go up, right? So let's just remove that. Okay, so in other words, right, this can be a running flat, A, B, C right here, and then we're shooting for the minuet wave C. So therefore we've completed this B, this minuet B. Therefore we just need another minuet C on the upside to complete basically wave X, right? So let's just see wave X. Okay, so we have a wave X right here basically, and then we're guess what? We're gonna go down, right? So I'm waiting for this to happen so we can actually have a good trading setup on the currency pairs, but also on gold, right? So I'm looking at a trade for GBP USD, for Euro USD, and for gold when this actually happens. So basically for next week, pretty much pretty simple, what I'm actually expecting right here. Okay, let me just delete this. For next week, I'm basically expecting the following thing. So we have basically in this 4 an ABC structure. This could end right here, or this could go down, or we could have another corrective for this, and then another right here, and then go down. Right? Either way, we're gonna take a look at it, and then basically here is when we're gonna buy. So we're gonna take good care here to actually see what the decision will be, and then we're gonna have our trading setups. Now we're gonna move on. Basically, let's head on to gold because it has nice trading setup that I'm looking at for quite some time. Okay, so from the time of the post, which was 17th of February, right? This is basically what we have right here. We have the first wave, second basically the miners, right? And then an extended third wave with green free, basically an extended third wave, so 1 2, and then extended 3 within this. 4 5, and this is basically where I was expecting the second wave corrective, right, from here basically to go like this. However, this went above it, so it can be treated as an A B C or for the fourth wave corrective. Therefore, where basically this is basically when you can see the previous videos, I actually called this bullish divergence for you guys. Okay, so in other words, we had a 1 2 3 4, and we're gonna have the fifth wave pretty soon as a leading diagonal. So basically, this is the post, and let's just load the new bars here to see what we're expecting. So at 1260 price has been rejected from there, but um, what I would actually expect is this being a leading diagonal, right? Three moves on the upside for the fifth wave, right? But this can also go a little bit here and then all the way up top. So either way, we're gonna have this trading setup. Once the US dollar will start going up like that, the dollar index will start going up like that. This is basically what I would expect the intermediate wave to complete, and this is we're gonna buy gold for the rest of the year, okay, for a few months. So I'm very much looking forward to this trade. So I know that there's there are traders talking about going gold going up to the moon. It's not gonna happen just like that, right? So just keep an eye on the charts and be updated. Yeah, but anyway, let's just go on gold here. So this is what I have here for gold, this trading setup. Now, this being a leading diagonal, right? This can be counted as a 1 as well, then 2, 3, 4, and then 5, right? Either this way, or we can just leave the count as it is, right? So we can have basically 1 2 3 4, and then basically an extended 5. So 1 2 3, another swing on the downside, and then the final move on the upside. The reason why I'm saying that is because we don't really have that bearish divergence yet, right? So I'm going to take a good look at this when it comes, right? So we're going to basically, we don't have it yet, but pretty much by the looks of this volumes, pretty much we're gonna have it very soon. So we're gonna have a good trade here. So limit orders have already been placed. What I would advise is basically if you're basically took that trade for 1260 to sell, obviously you're gonna have this corrective, right? So just move your stop loss into slightly in the profit, right? Either a trailing stop or whatever you choose, just in case it goes above, it just stops you out in a small profit, and just whatever you want, you can actually take it at a better price, right? So we'll basically see, we'll monitor this, but either way, you guys can always book your trading sessions with me, so we'll be in the loop, right? Now this is the sell setup for gold. Basically the levels want to in focus will be 1260 and 1270. Price already was rejected with a nice candle on the downside here, right? An impulse. So we'll see what will happen next week. So the dollar index will actually guide us through. Uh, same setup for silver. Let's just head on to silver there to basically see what we're gonna expect. Okay, so February 16, this was posted, right? And pretty much the structure looks better on silver right here. So it might be one step ahead of gold. Let's just load the new bars right here. Okay, and we can actually see that it went from there down, and then went up right here. And we're gonna go on the charts basically to analyze this swing to see if it has more room or a weakness is actually coming. So we don't have the bearish divergence right here, right? This means that we're expecting another swing on the upside and then have that bearish divergence. So this is basically our trigger for the sell setup. We're just gonna let it wait, let it run, right? So We're just gonna see it through and then basically be ready for it. So in other words, what is expected right here? Just a small corrective on the downside, this being basically the previous resistance, now support. So just to go a little bit, trigger this entry, and then we're in, right? So this is what's expected for next week for silver as well. So it has pretty much the same trading setup as gold, as it they work basically kind of similar. So we'll we'll actually see. But I'm gonna keep you guys updated. Obviously, just book your sessions, right? Moving on to the more difficult, let's say, wave count on crude oil. So what we have here on crude oil is a very difficult wave count, a complex WXY formation formed out of flats, irregulars, triangles, and yeah. So basically we have a W right here, and then a complex X, an a B, a triangle in 4 ABCDE towards ABC to complete the C for X, and basically what we have is another swing on the downside, right? However, this will be an irregular structure because the B goes basically beyond the start of A, right? So we're already gonna have basically some swings on the downside. This is what I'm expecting before it really shoots on the upside, right? So we're waiting for wave X, minor wave Y, sorry, to complete, right, on the downside, and then we'll be interested in buying crude oil. However, by the way this wave structure looks like, I'm basically gonna just gonna take to move the stop loss and basically just be cautious with this because it's a very difficult wave count right here. Many swings have actually happened, doesn't have a continuity, so I can actually be more relaxed with it. Okay, so moving on to the currency pairs. This is a very interesting trading setup because you see we're still waiting for the cycle wave 4 to be completed within uh, basically the WXY formation complex one. So we have an ABC within W so far, an ABC within X, head and shoulders right here. Please trade with very good cautious, and be very cautious here, because if you do recall, I actually said that dollar index once the temporary swing on the upside will happen, then it will have a weakness in its wave Y for its 4, right? So this means that basically on this inverted head and shoulders formation right here, then we're going up, right? To complete wave Y's, basically wave Y, and to complete the cycle for wave 4, and then we're gonna go down for 5, right? That's completing basically the super cycle C, because we have the B right here, we have cycle wave 1, 2, and then 3, and obviously this is going to be the 4. Now the reason why I'm saying that is because wave 4, according to one of the most reliable uh, rules of Elliott waves, states that wave 4 should end inside another wave force territory from a previous degree, which is basically this primary wave 4 right here as an ABC as a flat, right? So we have a breakout right here. So our target will be just below that, the first target, and the second target basically 161.8 on the fibs by measuring W and X towards Y. All right, so basically the second target is at 1.3300, and the first target is at 1.2800. So this pretty much looks like a good trading setup. However, it's not ready yet. We're gonna zoom in and I'm gonna basically prepare you guys for what's the best way to trade this one. Okay, so this inverted head and shoulders pretty much looks like this, all right? We have an A, B, C, basically minors towards intermediate A, then intermediate B, intermediate C, thus completing basically wave W, the primary W, and then shooting basically on the downside with the same thing, three intermediates for basically completing X. Now what we have so far is we have a five-wave structure on the upside for intermediate A, which means that wave C should be expected to have the same. So minor wave A, and then towards minor wave B, we have a contracting triangle. We have the first minute wave A, and within minute B, we have a complex structure A, B, C, D, E within this triangle, and then the breach towards this A, right? So let's just zoom on in to see basically where we are going. We have the minute wave C basically to expect to be completed. However, we need basically three swings on the upside for it, thus to basically complete minor B, and then we're going down to complete wave C, minor C, intermediate B, and obviously we're going to shoot up. What I mean by that is basically the following thing, right? So we had a swing on the downside. Obviously this will be an important support, right? We already have a trading setup posted for the intraday there with this entry point right here, because this is a vibration level within this triangle. You know, bulls basically one right here. So keep in mind, right? According to what I said earlier about the dollar index, another wave on the downside is expected for the 50 before it actually takes off on the upside. That's meaning, of course, a bit of weakness for British pound, US dollar, right? So we had basically minuet wave A right here, retracement minuet wave B, and we're basically waiting for this to happen. So while the dollar index will have its last fifth leg on the downside, basically this is what I'm actually gonna expect, right? So we're gonna have the C wave, and then completing minor C, intermediate B, and then shooting basically for this trade. So this will be our trading setup, and we're gonna take a good look at it. But still, we're also gonna be interested in this trade, right? This can go even lower. We'll see how much basically how much room we'll have with the dollar index's gain, right? Now moving on, let's just go to euro dollar. On Euro USD, basically what we have is a five-wave structure on the downside for minor wave A, and basically the B wave. I'm not really satisfied with how this went right here. This pretty much looks like it has another move coming, right? However, we can treat this as this minor waves B retracement as a irregular, basically irregular corrective structure, right? Because this move was basically went beyond the start of A. So we're gonna have basically pretty much something like this, right? A limited move right here before it actually goes down. So we're going to take a look at the signs. We're going to have a bearish divergence right here. Keep in mind that dollar index will have its temporary strength. So we're expecting another wave on the downside here for this minor C, right? Which is gonna be a very good trade, and then of course we're gonna have a trading setup for a more like a medium term, both for Euro USD, but also would be very much interested in that British pound US dollar, right? So these are my expectations for the Euro USD so far. There was a signal going on right here for this one, but also for this move. So let's just go on to the market analysis and make a recap on that. So this is basically when the head and shoulders pattern will actually show us at the end of minor wave C, thus completing intermediate W. So we're gonna wait basically for this minor A, B, C to complete on the downside, right? So it's really not over yet. As you can actually see from the time of the post, this is basically what happened. We had a nice gain for this trade, which pretty much did not go against us at all, right? So we actually have that, but keep in mind we're gonna wait for one more swing on the downside, basically. So this A can be moved here as per the previous chart, and this B can be moved right here. So therefore we still have minute C to be completed, right? So we're gonna trade this on the downside and then take it up, right? So that's basically what's gonna happen for the next week or so, next week or next 2 weeks. We'll see what the charts would actually tell us. Now another thing that I can say, if Euro USD is expected basically to go down and then go up, and British pound the same, right? We should take a look at the Euro GBP, right? Because that's going to be our next focus. We had a very successful run so far with Euro GBP. It's one of our favorites. So let's just go to it and actually see what's the update on it. From December 21st, when this trade was actually posted, we traded this on the upside, and then of course we took it on the downside for the completion of the right shoulder from this head and shoulders formation. So let's just load the new bars and get updated here, and this is basically how it went. This was a beautiful trade. So what we would expect so far, right, is, remember that on the short-term basis, GBP USD is expected to complete that final minuet C. So therefore, another swing on the downside for Euro GBP, okay, and basically to hit this neckline, right? This important support, because we have a bounce off. So price is going to come and basically retest this. And once we'll have that, then another bounce off will be expected. So this will only be treated as the end of the fifth wave, because this was the fourth wave retracement, fifth, and then we're going to shoot off for a corrective. Once minor C will on the downside will be completed for GBP USD, this is basically what I'm expecting. Euro GBP to go basically up right there, and to complete minor B, and then we're gonna go really bearish because we're expecting that GBP USD to shoot and complete cycle wave 4, right? So intermediate C and primary Y. So we're gonna have a good trade, right? We're preparing to trade gold on the short term on a sell, long term, medium long term buy, silver the same, and then oil will get updated on that, right? But as for British pound, I'm very much looking forward to that trade. Also the Euro GBP, right? So my focus will be on GBP USD, Euro GBP as of now, but also medium term on USD JPY, right? So for Euro GBP, we're expecting a swing medium term on the upside, right? Not before it actually goes down one more leg. So we'll see. We'll monitor it and be sure that we're gonna post it. Anyway, you can always head on to our our website, check out the analysis, basically lionheart-ewa.com. Just get updated there with us. Apply for the services if you wish. If you're looking for advanced services, of course, then they're all there. So it will be our pleasure to basically help you out and give you some good trading insights and basically stay in the loop with us, right? Trade better. So anyway, as a recap, we're gonna shoot medium-term GBP USD sell, long-term buy, Euro GBP medium-term buy, and then long-term sell. Gold short-term, medium-term sell. We'll see what the structure will tell us. Most likely short-term, right? So for a few weeks, let's say 2 weeks, something like that, sell, and then we're gonna basically shoot on the upside. But the same for silver, right? Euro USD, basically we're gonna take a look at the dollar index. So medium term, we're gonna have short term, medium term, it's a sell, and then we're gonna look for a buy. That's basically it. Let's see another trade and the last one. I mean, not the last one. I'm looking basically. I will be interested in buying Euro JPY and USD JPY. So as the dollar index will gain strength, some good pips will be available basically on the upside for USD JPY. So I'm expecting a bullish run for that, right? So let's just head on to the previous analysis and see. Medium term wise, we're looking to buy the US dollar. So basically this will happen. Let's see, from the time of when the analysis was posted, this is basically what happened. So we had a good gain right here, and then we basically used a trailing stop, which of course you guys did as well. I mean, I'm talking with the members right here who are actually following the YouTube channel, but yeah, we did take a good chunk of profits right here, and then on this swing, we're basically interested in buying it even more once the US dollar will basically commence with that C wave on top, that thus completing the X. Then we're basically we're gonna sit back and actually see what happens, because this fourth wave might not be completed yet. So has room to go all the way down here and possibly even hit the 61.8 on the Fibonacci retracement. So we'll basically see. For now, medium term, short term, medium term, we're interested to actually buy this, right? So this was posted then. However, we will update it very soon. Okay. As for the intraday, you guys who are actually, this was posted for you, those intraday traders mostly interested in getting quick trades right here. Basically, this is when the analysis was posted. All right, so basically you got this swing on the upside. Now the thing is that obviously the market moves ups and down, up and down, right? So if you don't monitor your trades, then you're not really a trader, because that's what it's all about, right? You need to move your stop loss into profit, either use it to, trading stop, or just take the trade, take the money, just close the trade when it's in profit and just settle down and enjoy it, right? Move on to the next one. Don't force it. I mean, retracements are always gonna either take you out. The difference is that they're either gonna take you out all your gains, or they're gonna take out a very, very small part of your profit, because you basically you were cautious. You basically use the trading stop, or you move your stop loss into profit, right? At considerable levels, for example, here or here, we'll see. Just gonna finish this, end this video here with the latest analysis, right? So this was actually posted yesterday. We have a zigzag pattern in minor B. So as per the dollar index, right, we're expecting basically this four to finalize right here, and then the fifth wave to end. Thus, I'm just gonna leave you guys with some an insight. Okay, there's nothing to load here, okay, because the market was closed, but there are some levels to focus on: 111.900 and 111.600. Okay, those are our entries for this trades. Just take a look at it, because you see wave X is basically expected to be complete, the intermediate X, and basically what we're doing is we're shooting for the minor C to complete this X. Then we'll be interested in basically selling that towards the 61.8 on the long term. These were the trading insights for this video. Hope you enjoyed it and that you found the info useful. Head on over to lionheart-wa.com and stay in the loop with us, become a user, or get your membership. There are available promotions at this time with 50% discounts for new memberships, but you can also get a free session if you are a new user. So if you just want to see what it's like, then feel free to take advantage and book it. More info in the description bar. Thank you very much for watching. Be sure to subscribe and tap the bell for YouTube notifications. Your support is much appreciated. This was Richard signing out. Stay in the green and many pips ahead.